Hello, YouTube. Thank you for stopping by on my channel. So, what I'm presenting here today is introduction into my company. So, the company is the Wealth Catchers, and just wanted to upload this video. It's my first YouTube video I'm uploading. So, just want to upload it to give you guys a breakdown and introduction into the company, what this channel is going to be about, and what our goal is. So you see here, we got my company name, obviously the logo, and then this is our slogan here: catch and secure your wealth. So that's something that I feel that we are often chasing things and going after things, but adding that part to catch and secure it is another layer of identifying and verifying that it's in our possession, right? So the goal of the whole brand, the whole name and everything is to empower the average everyday investor. So we're more so geared towards providing financial education for a brighter future. And this is ideally geared and aimed towards newer investors. So there's some information for all levels of investors that they could gain from it, but this is more so for the everyday person who's, trying to open up a brokerage account. I'm just trying to understand the basics of investing, what to buy, what not to buy, how to probably read a chart, how to read, fundamental investing. Is this a good company to look at? Am I wasting my time over here? So those type of things, just to make them, better informed investors. Because a lot of times we get lost in the jargon, we get lost in all the noise and don't know what to do. And then those investors, I feel like, get overlooked and then they get forced into target date funds or nothing wrong with those, but they get forced into certain funds in certain situations where it's just because they don't have the knowledge and they're also afraid to go out there and learn. So that's just our goal to help them, overcome that and get through that. So our goal here too is a legacy as well and then generational wealth. But I know that's like a overused term now. It's very popular and everything. But I do believe in that still, though, in terms of what you're doing today is, for yourself as well, but also to pass it down to the generations behind you, whether that's your children, nieces, nephews, cousins, other family members. But you want something to pass. You want everything you work for to pass down to somebody at some point, right? So obviously we have a legacy, the foundation, for future generations that could build their financial stability. Then we have personal empowerment too. So this is also a goal to empower yourself, to prove to yourself that you can achieve these things. You can develop a plan. You can execute. You can be disciplined and things of that nature. So I just want to put a highlight of the past 20 years of the stock market. So ideally, the S&P 500, it's averaged about an 8% return over the past 20 years. And you hear a lot of talking heads and pundits say over the past 100 years, the market has averaged about 10% return with dividends included, which is pretty accurate. So just to highlight that, there's a whole market that people are avoiding, are afraid to be a part of because one, they don't understand it. And two, yeah, we've had some bad corrections, some bad crashes, and some very bad moments in the market. But when you zoom out and you look to the left, I mean to the right and up, everything, the stock has always been going up. We've had our dips, we've had our moments where things have been pretty dark, but you stay in there for the long term, for the long haul, and then you'll see it compound over time. It's just going back to that discipline, going back to that sticking it through and getting through to the end for it. So for the wolf catchers, I personally have this own philosophy I came up with for, I shouldn't say I came up with it, but something I follow, I should say. So we believe in long term growth. So there's certain strategies I like to follow when I am looking at a stock, ETF, a sector, whatever the case may be, how I approach it, how I plan on putting my money towards it, and those type of things. And then also we got risk management. So being smart with the money, not blowing it all in one trade or pulling it all into one investment, and just being smart about what you're putting in, like something I'm not going to be overly disappointed with losing if it doesn't pan out for me, right? So just taking advantage of those things. And then also, I'm a firm believer in concentration investing. So for concentration, I feel like oftentimes you always hear people say, oh, diversification, diversification, which I do think that plays a factor into your investing journey. But I've always heard the diversification term get thrown around from people or names or people who have reached success after they've already reached it. They didn't diversify on their journey to wealth. They most likely was concentrated in some type of situation. They either were concentrated in their investments, that investment being a certain stock, that investment being a business they created, that investment could be just their regular W 2 job, but they concentrated in that, built their wealth up. And then once their wealth got to a certain point, then they diversified it in order to preserve it. So then that's when they reach a certain level, whatever that number is for them or for yourself, a million, 2 million, 3 million, 15, 20, whatever it is. And then they start putting their eggs in different baskets. But what propelled them to that point was most likely probably one or two investments that they made that they held on for the long term, compounding that. So imagine a business that you created, you started, you compounded that over a couple of years, over a couple of decades, got to a point where either you could sell it, you could exit yourself out, still be overseeing it, but you're not part of the day-to-day operations, and then you're able to go ahead and invest those profits into other companies and into other situations. In case that falters, you still have other legs to stand on. So again, I believe in concentration first, get to the number you're trying to hit, and then diversifying. So then we have our key pillars of wealth building here. So again, concentration. So focusing on just, a few quality names or assets. And then portfolio building, something down the line. For next video, I'll have it structured and built out how I view portfolio structure, how I feel like a portfolio should be built. But again, that's my own bias based on what I'm trying to accomplish. Everyone has their own goals. Everyone's at different points and times in their lives. Age plays a factor, of course. What your end goals plays a factor. What you're doing it for plays a factor, obviously. And then another pillar of wealth building, patience. So there's a lot of times you're going to see whether you've gone through it yourself already, or you're going to see it from whether your colleagues, your parents, friends, family. They're going to, everyone's going to freak out when the market crashes, or there's going to be euphoria. Everything's running up. Everyone thinks they could go in there and make a trade. They could hit on crypto. They could make money on this meme stock over here. So patience is going to be a big thing you're going to need to tap into to figure out where you're at in the trend, where you're at in the market, and where you're at personally. If you could take risk, if you should pare back, or you're seeing a disconnect here or there, you want to be contrarian, go against what majority of people see in the market. So that's something you'll learn over time, having a feel for your investment philosophy, strategy, how you move, and taking in all these data points from what you see around you and to figure out, hey, let me go here while they go there. Another pillar is education. I feel like you're forever going to be a learner. I personally started my education journey in the financial markets and financial literacy in the fall of 2019, and constantly been learning ever since then. So I've been on that for pretty much a while. So I've been on that pretty much for a while. So I do believe education is always going to be a factor into it. I feel like you never learn enough, and then honestly, you'll never know everything. You just want to know enough to be dangerous, right? You want to know enough to be able to execute. You don't know enough to not be afraid of what's going on. Have a deep understanding. Mindset plays a big factor into it too. You gotta have a strong mind. Can't psych yourself out. You can't let others influence your decisions. The second guessing is gonna hurt you. It's going to hurt you on the end where you're either going to enter too late into something, start a position too late, or you're going to end up holding the bag for too long and get burnt because you chase something. So mindset plays a big factor. You know what you're doing while you're doing it, and that's what you should focus on. And then the last pillar is diversification. So I feel like concentration is going to do the hard work for you to get to where you need to be at. Then after that, you get to diversification. That's when you have to space everything out, spread stuff out, and then we have to, keep this train going. Still able to take risk, but now we've taken so much risk, we're gonna pare back, profit off of that, build more legs out so we can stand firmly. So my process here for developing my watch list, you'll see over time when I share more information. And also at the end, I'm gonna have the link to my website up there. It should be probably in the bottom of the description. My website. So I have a watch list that I put out. For the most part, they're pretty much always going to be the same. I've been doing it for a few years now. So for a criteria of selection, so I have my own things I follow. I like to go with, you know, top names in the space. I don't believe in finding the diamond in the rough, the random company in the middle of Nebraska that no one knows about. I don't believe in moving like that and investing like that. I want the big dogs. I want the company that it's being compared to. Like, oh, this is the Tesla killer. I'd rather go buy Tesla. This is the Microsoft killer. I'd rather go buy Microsoft. Like, it's good that that name or whoever company or whatever company is being bought up into that same breath. That's great for them. That they probably have that possibility, that potential to go toe to toe with one of these gigantic companies, but I rather put my money on the gigantic company. Now, if you want to be speculative, if you want to take that risk and have that, yeah, probably buy Microsoft and that small set company, put some funds in there, something that you're not afraid of losing, just to, be in that position if you have that itch you got to scratch. But again, back to selection, I like high quality names, proven track record. I'm someone that's big on profitability. You got to make money. You know, I'm okay with high revenue and I do like profit, but if you're barely breaking even, as long as you have an increasing revenue coming in. So all those things play a factor. Like you gotta have mind share, you gotta have market share. Again, I want you to be number one or two in your space. I don't care if you're number five. I don't care if you're up and coming. Like you gotta be dominant because again, you're tying your money, your hard-earned money, to these companies for them to work for you to propel your financial situation to a better spot. You don't want to put it on the six man coming off the bench. You don't want to put it on the third string quarterback. No, you want to put it on Lamar Jackson. You want to put it on Tom Brady. You want to put your money on Luca. Like you do not want to pick these subpar names and then just be like, that's hope at that point. I'm going with the proven track record. You got $100, you put in $90 on a proven track record, $10 on the little random company out of Idaho. So, and then analysis techniques. I do a little technical analysis, and I also have qualitative and quantitative things that I do. So I do like to read the balance sheets. I'm first coming into investing, just to be transparent, I'm a long-term investor. I've done trading before, options trading. I've done some day trading and stuff like that. Another full transparency. Never made too much money, nothing crazy. I've paid my stupid tax on learning those methods and then figuring out what type of investor I am. And so paid my prices and paid my dues for that. I know I'm a long-term investor. I'm okay with that. If every now and a blue moon I want to hit an option trade, I'll probably do it. But that's just again for an itch to scratch, nothing crazy. But I was real heavy into the fundamental investing. I still do that now. I still go on Thinkorswim, type in a ticker symbol, and then I go read the reports. I still read up on articles, things like that. I do use AI a lot for deep dive investing, deep dive information, I should say. information gathering. So I do use that a lot. I compare notes. So that's my qualitative part. And then the quantitative, yeah, my watch list that I have on my website, it's all about entry points. I'm real big on using moving averages, using MACD, RSI, and seeing where prices may end up falling. And then a regular review. So I like to always know what's going on, usually with the stocks and the list that I have. It's pretty extensive list. I think I have probably over 25 names on there of investments. So it's ETFs and it's individual stocks. So you'll see that once you go to the website and you see all that. What I do, like I said, it's been something I've been doing for a few years now, since 2021. So there's a lot of data on there, and every now and then I might rotate some stocks out, rotate some stuff in. Usually at the end, if I change something, I put a little note at the bottom why I kick something out, why I put something in. But for the most part, if you go back through the archives, you see from 2021 to now, you're going to see some of the same consistent names that's been there. And then if you want to, do your due diligence, you can go pull a chart up and see, hey, Microsoft from 2021 to now, and you'll see why it's still on the list. Like, so those type of things. Again, you want consistent companies. So, um, the watch list I'm talking about, so that's my monthly watch list. Usually the first of the month, it always comes out. And then usually I put a post about it, share that, hey, my watch list is up. It's usually right there on the website the first of the month. I try to be very diligent for that. I use a couple of days to prepare for it and everything. So I go over what happened over the month, what prices we're looking at for the indexes to fall to, where our fear and greed was at. Anything crazy that happened in the past month, like, trade wars, stuff about tariffs, it could be presidential elections, it could be, like what we got right now, the government shutdown should have just ended. So those type of things I keep in my opening statement of the watch list. And then towards the bottom, I have all my entry points for the stocks. And then just this here, just a sample of my watch list. So here I got tickers, Waste Management and Shopify. Have my price points on there. I usually do a daily chart entry and then also do a weekly chart entry. And then I can also go into some detail about what I see on the chart. So like for the daily chart for Waste Management, gap down, fell into a no man's land. That for me, there's no support I see on that 1 year, 1 day chart from where it's fallen to. And then stuff like I see consolidation here. I'll let you know where MACD's at, where RSI is at. Same for Shopify, hit an all-time high. RSI is at 63 after falling out of overbought territory. So those little things. I have little notes, why those price points were chosen, and also what it's currently doing at that time of the release of the watch list. And then this is long-term planning frameworks. So this is what I believe are tools for financial success. So goal setting, budgeting, retirement planning. So I do feel like everyone should have a goal. You should know why you're investing and what's the purpose for it, what's the goals for it, and things of that nature. As for budgeting, this channel is going to be more so geared towards strictly financial markets. So pretty much just stock market, maybe a little bit about the crypto market. Budgeting, I have to look at that as a personal finance and managing your money in terms of that, like, what's coming in, what's coming out. It is important, it does play a factor, but I really won't touch too much on that in terms of like, building a spreadsheet to know your expenses, like your mortgage and rent and all that. This is not the channel that's really going to go into that. Not saying I don't care for it, but that's not where my passion is and my focus is for it. But budgeting is important so you can have funds to invest if you have your traditional brokerage account, things of that nature, right? So that's where budgeting, that's why I put it in there, because budgeting does play a factor in that. It helps you create or find money inside, your account, your wallet to invest, to take opportunity in the market. Then we got retirement planning, which is obviously, your 401ks, your IRAs, and things of that nature. We talk about that on here as well. And then again, planning states, goal setting, budgeting, retirement. So again, establish a clear financial goal. Two, create a budget to manage your income so you can have the money to obviously invest. And then plan for retirement. So understand the difference between your Roth IRA, your 401k, stuff like your HSA, all these accounts that you have access to, or do you need to do a company match? Does your company even offer a match in any of those things? So just stuff to keep you abreast about and stuff that we'll dive into to talk about on this channel. And then this is just highlighting the goal of us here at the Wealth Catchers. So again, our main goal, one goal, is provide sound and beneficial financial education. So again, full transparency, not a financial advisor, not a fiduciary, but I am someone that is passionate about the markets. I am passionate about quality information, sound information. I'm not going to say everything I say on here is going to be 100% correct. I will make mistakes. Even professionals make mistakes. Even our talking heads on CNBC misspeak sometime on Yahoo Finance. People do make mistakes, but I feel like the thirst and the quest for knowledge is what brings us all here, because I feel like you can always learn. I've read countless books. I've done countless things in practice, lost money, made money, um, opened the accounts. I've done the custodial accounts for my child and my younger siblings. I've done the 401ks. I've done the open a Roth IRA, got the HSA. So done the things, and just seeing and being exposed to a lot of people around me that don't, how can I say, that don't really know what they're doing or aren't too sure, is what really inspired me to even start the Wealth Catchers in its entirety. Because it started in 2021, and then I was just like, I enjoy writing, putting the blogs up and all that, but I was like, also I want another avenue to reach people. And then that's where, the YouTube channel has been in the back of my mind for a long time. So I was just like, whatever, let me just try and see how it is. The website is obviously my most comfortable thing, and the YouTube is something I'm going to be trying out, and it definitely we'll see where it goes from there. And yeah, I just wanted to give you what we're about there. So obviously geared towards beginners. We do have information that is going to appeal to some intermediate, maybe some advanced, because again, you can always learn something new. Here's the contact information here at the end of the page. So the Wealth Catcher at yahoo.com. And the website is thewealthcatchers.com. And again, that will be at the bottom of the description. So I do appreciate you taking the time, sitting down, listening. Definitely hope you subscribe. Look forward to some more videos coming out soon. I'm going to see if I could batch create some content. I'll definitely get into my uh, bag of creating content now. So definitely looking forward. This was enjoyable to do. So do appreciate you guys sitting through this and listening. And look forward to seeing y'all next time. Y'all have a good one. Peace.